Often on the days that I record these power charting episodes for you, the market decides it's going to become roiled, tumultuous, go into a major reaction. Today is such a day. Well, let's look at the market and see if we can determine how the conditions set up in a Wyckoffian world for the weakness and the reaction that we're having right now and whether or not it can continue from here. Also, we're going to do a Wyckoff workshop on the stock market life cycle model. Really important, valuable content in your Wyckoff knowledge base. So this is going to be a lot of fun, and we're going to make it current. We're going to make it about the current market environment. So with that, a couple of quick announcements. The TSAASF is going to have their annual conference September 12th. This is the 50th anniversary conference, the first time ever. It's going to be virtual via Zoom. Remarkable list of speakers. So please have a look. The cool part is if you become a member of the TSAASF, which is not expensive, you are able to attend for free. Go into the website, click on registration open, and you can see the topics the speakers are going to each speak on and also learn a little bit more about them. So please consider attending. Roman Bogomazov, great, brilliant Wyckoff educator, is starting his fall teaching cycle. He just had his first classes in the Part 1 analysis and Part 2 execution classes, and you can go watch those on YouTube. Just go to his YouTube channel and or go through his website, and you'll be able to watch those on demand. And we just had a blast doing the Wyckoff market discussion yesterday. It was a great session, great episode, and that also is available on demand, and you'll be able to watch that in its entirety. So please check out our cool Wyckoff market discussion, which is every Wednesday. The Wyckoff price cycle is really the heart and soul of the Wyckoff method. It seems so simple, but it's so elegant. And the idea being that the Wyckoff price cycle really is in connection or relationship to the economic cycle. But here's the thing. The price cycle works in all time frames. You can find them in the business cycle, you can find them in the shorter time periods, and inside of that, which is where the genius is the concept of the accumulation area, the concept of the distribution area, and then the all-important part, which is why we do this, which is the trend that follows accumulation, which is a beautiful uptrend, and the trend that follows distribution, which is the markdown phase. So this is why we do this, is to identify preparation for trend, preparation for trend. That's what we're going to talk about today. This is a blog that you can go back and read, but here to just add some additional color to this, you can see that the accumulation schematic, one example here with a spring, here's another example with the last point of support, but each of these is accompanied by phases of price behavior that determine the evolution of an accumulation into its important uptrend in each of these cases. The same is true for distribution. We've talked about these in the past, and we will talk about them again in the future. Keep this in mind. We're going to show you some more examples of this as we move forward. This is really the essential chart that we're going to use today. This is a beautiful chart that was created by Roman when he was a graduate student, and he had been taking the Wyckoff and Elliott class under Dr. Pruden. So here you can see this was an integration of Wyckoff, Elliott, and Dr. Pruden, who synthesized these together. Well, this beautiful schematic is what we're going to use and talk about today. Here's the accumulation area of an important cyclic low. Here's the distribution area after an important cyclic high, and then the subsequent uptrend and the downtrend. Well, this is for real. This stuff is for real, and I'm going to show you a real life example of this here in a few minutes. So with that, let's just keep going. We're going to talk now a bit about the current market situation as it is unfolding. This is the CNN Fear and Greed Index. You can go right in and search for this, and it's the page has got all the individual components of the psychological indicators that go into this. 0 is the low, 100 is the high, extreme greed is 100 or thereabouts in the range of, extreme fear is near 0. They don't ever really get to those levels, but they get close. So you can see that back at the 2018 lows, there was a near 0 reading, extreme pessimism. And then here at the end of 2019, before the big COVID decline, was a reading that was almost 100, like 95. And so at the COVID lows, it was, I think, maybe as low as 3. I mean, almost an unprecedented number. But what I want to show you is that oftentimes the important peaks come in the area just below or around 80. And so we can see here that's exactly where we are now. The buying climax of January 2018, which started this huge trading range that we really still are in, at least in the case of the Dow and just above it in the S&P, we can see that this was achieved at about a high 70s reading, high 70 readings here, and then we got up to around 94, I believe, at this upthrust action in January and February 2020, and then the extreme weakness at these important lows here, here, and here. But notice again that we are near 80 on the Fear and Greed Index, and we've just thrown over this important broadening trend line in the Dow, even though the S&P and the Nasdaq 100 are at new highs. So oftentimes the Dow is sort of the interesting sort of outlier, and so we'll be watching this closely here. The other sentiment indicator we're going to briefly look at, we've seen this before, is the put-call ratio. The put-call ratio got down to a reading of about in the area of February, March of 2020, where there was, well, I guess it was January, February, where the extremes of optimism, bullish speculation were reached, and this was a near record for volume. So with this, you can see that this reversed, and the very pessimistic area, bearish speculation at the lows in March. Well, here we are again, we're even lower now. And this green line is the 10-day moving average, which is what I like to look at. And we watch for this to not only be at an extreme level, in this case, bullish speculation, but to turn. And so this at a very extreme reading on the index is very low, and we will be watching that closely because speculation on the bullish side, call buying, is very high. Okay, so here we're going to look at the presidential election year chart. This is a fascinating chart that we've talked about in the past. And so here we can see that the reading actually, to explain the background of this chart, This is a compilation of all the presidential election years of the last 116 years through 2016. And it is a summation of all of these years to give sort of a rough idea of how the election year can go on a sort of a cyclic seasonal basis. Well, the first half of the year we can see was effectively a volatile trading range. Starting in May, June, July, there was an attempt to uptrend. And notice this, the best month of the year is the month of August. And so there is a tremendous rally in August with an acceleration into a climactic surge and a inverted V top of sorts that occurs right at the beginning of September. And this is pretty much describes exactly what's happened in 2020 is the month of August has been an epic rally month for the stock market, for the stock indexes, particularly the Nasdaq 100, and an acceleration into a climax, which is showing on the cyclic chart, has also occurred in the markets as a whole. So looking at the Nasdaq 100 here, we can see big trend channel going back to May, June. So keep in mind what we just looked at with the trend model. And there was an overbought condition in July. There was one in June, range bound, July, overthrowing the trend channel, trading range, and then the August advance here, and you can see it concludes with a climactic surge and a throw over, overbought condition, and a throw over in the Nasdaq 100, which has been just a dramatic advance for this index. This is 60-minute data intraday. So here is the S&P 500, and you can see the June extreme, which is climactic with a gap, and then a big reaction, range bound condition, and then starting in July, well, really here in the June low, late June low and onward, a tremendous rally phase. Here's the August period with the climactic surge, buying climax, throw over in the S&P 500. So again, following the cyclic model of the presidential election years with a climactic surge right into the beginning of September. Interesting. So looking back here at this model, we can see that there's a reaction, but notice the reaction is only about 1/3 of the advance in August. So it's a reaction of some volatility, goes back to the bottom of the trend channel, but may not be that deep, and then is followed by 2 additional or 3 additional advances that all go to new highs. Now, who's to say? But it's possible that this is the scenario that we get. Market is going to be dealing with the uncertainty of an election at the beginning of November from here. And also keep in mind that September is the last month of the quarter. Often we see important tops and bottoms at the in the final month of the quarter, and also the first month of the new quarter. So this could very well be what we're getting now. So with that, let's look at the S&P 500. So the S&P 500 point and figure chart here, look at this accumulation phase. Again, think of the cyclicality. This is just looking at daily data, one box method. So we're getting a swing trading count here for the S&P. This count from the low and this last point of support counts up. It's a rather wide count, so we're going to also mark the middle of it. And it counts up to 3667.16, and with a midpoint at around 3,400. In the case of this reaccumulation count, look at the beautiful confirmation in the reaccumulation of the accumulation count, which goes up to 3629. And as of the recording of this, I saw a high of around 3588. And so it did not achieve a new higher box than the one that it's in on this chart, but it's a hit. So we are in the range of the objective for the S&P 500. Just to look at another chart here, here is a 3-box method chart of the SPY in this case. And as of the time 357.54 was the count that, or was the last price for the SPY off of this count area. And this gave us a high count of 352. So we've thrown over the top of that and also thrown over the top of the prior peak. Beautiful distribution count here, by the way. In the case of the Qs, we went back and looked, which we will often do, is we looked for the bigger count because of the sheer magnitude or the extreme momentum of the Qs in their final phase up here. May not be final, but we had a count that went across here of 302, and the highest I saw actually was 303.50. So we are just above the high count of this range right here. Here is the Dow Industrials. This is the accumulation phase off the very steep COVID decline. This counts up to 30,008, and the reaccumulation count also counts to 30,008. So it's possible we could still get there. But here we can see that we're at around the high reading so far, around 29,200, which is in the zone of these counts. So midpoint, the high. So we have achieved the count objective of this accumulation base all the way back in March through about May. Lastly, I'd like to just look at this bullish percent index for the Nasdaq 100. This is a moment or a breadth indicator. We can see that there continues to be deterioration of the bullish percent breadth of stocks that are in bullish uptrends on this indicator index, and look at the acceleration of the Nasdaq 100 and lower highs here. So I don't think there's a reason to really worry until you get below 60, the support area, and into the 50s, but that could be a point where the markets start to have the ability to have more weakness. So, but I find this continued deterioration with such a strong index in the Nasdaq 100 to be very interesting. So let's just read this. We're going to shift gears here. This is the art of the campaign. There are many men and women in Wall Street and throughout the country who make a practice of taking profits in accordance with their ideas of proportion. Something like this. They say 50 points is a big profit, even if it is on a small lot of stock. Therefore, I will take it. Others say to themselves, I have a profit of 100% on my investment, and that's good enough. I will let someone else have the rest. In the case of American Graphophone, I followed a different rule. The number of points or the percentage of profit did not influence me. The fluctuations were interesting, but whether the stock went up or down, I decided to wait for it to reach a certain point before I would take profits. This meant the point where the insiders began to sell. This is a brilliant comment by Richard D. Wyckoff, which really exemplifies his methodology, because this is about tape reading. And we have a tape over here, tape machine, and you can ticker tape, and you can see here that he was looking for the conditions of accumulation and an uptrend and the conditions of distribution where the large interests were selling their primary positions in these stocks. Here is the accumulation phase here. And after that, the accumulation becomes a markup phase. And the markup phase becomes an uptrend that can go for years and years. When the exhaustion occurs with buying climaxes, automatic reactions, distribution, this is the evidence on the charts, in the tape, that tell us that the large interests are selling their primary positions. They are distributing their stock, and this creates a distribution condition in the market. So you can see here a beautiful uptrend. This is where the profits are made, is after the accumulation, after the markup begins, and into the distribution. This is the art of what we're doing. This is the life cycle of the market as a whole. And Mr. Wyckoff did a wonderful job of reflecting the conditions that conclude accumulation, the conditions that conclude distribution. So this is our work to be done. And then you can see in the case of this distribution model, which Roman did back when he was a graduate student, brilliant work. And it's a little fuzzy here, but it's the best copy we have. You can see the broadening formation, which shows the increasing volatility as stock goes from strong hands to weak hands. Over in the accumulation, the volatility diminishes because the stock is being accumulated, absorbed, closely held, difficult to buy. That actually causes the volatility to diminish in accumulation, volatility increases in distribution. Look at this particular chart overlaid on the accumulation schematic. This is the Dow Jones in 2009-10, and you can see how beautifully the accumulation with a spring or a shakeout and then the uptrend forms, very similar to our schematic model. Good job, Roman. He absolutely, in 10 years prior, had developed a schematic that followed very closely what happened in the accumulation area of 2009-10. And you could put the S&P 500 over this, and it would look very, very similar to this. So you can see the schematic at work. Well, keep in mind this distribution phase. Now, I don't know that we have distribution yet, but look at the chart we're going to look at next. Here's the Dow Jones back to the beginning of 2018, broadening formation, volatility is increasing throughout. It could very well be accumulation. Go back and read my blog, Where Were You in 62, which was written earlier in 2020. And there's a discussion of how this could resolve itself into a new uptrend. But this is a very important place on this chart because this upper expanding trend line is now being touched by the Dow Jones, even though the S&P and the Nasdaq have gone to new highs. This could be a form of important resistance that the Dow is signaling that is a little more obscure in the other indexes. So we'll be watching this very, very closely right here. Okay, so now I'm going to show you, these are my working charts. These are charts that I keep up through time, and I want to show you, in this case, we're looking at the Dow Jones Industrial Average. This is that period that we just looked at in the accumulation area in 2008, 2009, 2010. So there are counts. Look at this beautiful count here that flagged this area, and this stopped the advance in 2015, 14, 15, 16, and set up a new accumulation for higher prices. Here's our trend channel on the point and figure work, which we drew on our schematic. Here's the broadening formation that we just talked about. And these little counts all have been exceptional. Look at this distribution count. So I can't spend a lot of time here, but look at how it picked up this shakeout that occurred that put in the final low in 2009. Look at this beautiful accumulation and the count that it went to back in 2002, 2003 in the bull run, beautiful uptrend into 2007-8. So here they are over and over and over. And this is what I do is I just keep track of these important structures throughout. Look at the counts that are being fulfilled off of this accumulation area here. Well, now we're starting to get the ever increasing volatility. Here's our accumulation count at the COVID lows, throw under of the channel, and here we are into the area of where the count objectives have been met. Okay, here is a chart of this. Here is the accumulation area, the distribution area, the throw over that's occurred in the upward channel. This is the part that we want to participate in. Here is a throw under. We counted this. We're in the objective range now of where this has climbed to, overbought, throwovers, and just beautiful Wyckoffian structures. Here is the Dow on a daily basis. Here's the throw over, and now we're getting weakness. Very interesting if the Dow goes back below this trend line, expanding trend line, and then turns below the moving average, whether or not there is weakness back into this trading range area. Now let's look at the Nasdaq 100, where we can see here, this is the massive bear market. It started back in 2000, and this is a redistribution count, gave us a beautiful objective range here, but notice the very large accumulation structure that took years to develop. Here's 2011, 2012. We have 3 counts here on the way up. These counts have been very, very good. This touched this area. Then we had this count 293.25, which is the breadth or the widest count of them all here. And we are now in the range of that count. So we are there. We've fulfilled this. We need to have another accumulation structure. This could be part of it right here for higher prices yet to come. But we are now fulfilling counts that were made as far back as 2011 in very large accumulation structures where the count area was, the count line was around 45 on the Nasdaq Qs. So very interesting. And then I'll let you screen capture that. And then here's the S&P 500. Again, these are my working counts that I use. And you can see the big, beautiful accumulation. Our job is to identify and participate in these big uptrends. So with that, we'll get back to this again at a later date. Last thing I'll leave you with is we have the Wyckoff communal Wyckoff watch list. This is free, available on stock charts, and these stocks are selected by our Wyckoff community, and a lot of really wonderful charts, ideas, and great analysis that has been done by our Wyckoff Nation community to put these charts into this watch list. And with that, I'll see you next time. Thanks for being here.